Welcome to the Stocks with Josh show. Guys, the markets continue to be choppy. They refuse to give us a clear path or direction. Couple steps forward, one step back. I'm going to explain why we had the week open this morning, and I'm going to give you guys fresh technical analysis on the S&P 500 via the SPX and the SPY, and we're going to touch on what the market is looking for in today's Tesla earnings. We had a week open today because investors have been doing some early profit taking. You got to remember that we're up at 4,000, which is a key line of resistance. We were back on October 14th at the low of 34.91, and a lot of the smart money, they bought early and they're taking profits right now. Plus, next Wednesday is the Federal Reserve meeting, and investors are getting scared about what old Fed Powell will do, which is to talk. Fed Powell could easily give us that bullish 25 basis point rate hike, which would cause the markets to take off, but then he could turn around and bully the markets with extremely hawkish talk. He did the exact same thing in 2022 at the Jackson Hole event. He went soft with the hike, but then later shot down the August rally. We also have the risk of the upcoming December jobs and unemployment report. That's ahead of us, not this Friday, but next Friday. So the whales are definitely profit taking this morning. It doesn't mean that we're not going any higher. It just means that they are decreasing the size of their bags. And maybe so should you. Let's get into some technicals on the S&P 500. The micro trend, despite today's early move, actually remains bullish. Ultimately, to be confident in a bearish run, we would need to see a break and close below 3,800 on the S&P 500 measured by the SPX. Since we broke back below the bear barrier wall of 2022, then we have to acknowledge that at the moment, the 4,200 level is entirely off the table for the time being. We have to pull back expectation until or if we reclaim the wall. My view is that because we broke below, I'm now expecting a potential move down to at least 39.40. If we hit that level on the SPX and bounce, we'll actually be respecting the bullish move up by making a series of higher lows. We want to see some buying volume on that reversal at 39.40 to confirm a larger move up. And it's very possible that we might not get down there because we did begin to see a bit of a reversal after we went down slightly above 39.40. This would be a bullish move because we have taken time to backtest previous areas of resistance and make them support. And this is super critical. If we break 39.40 significantly, that means that things are breaking down and that the move above the wall was truly just a market fake out. After 39.40, I'm going to be watching very carefully a breakdown below 39.18 because that was the low of the double top. Okay, so we had a double top earlier and the bottom of that was 39.18. And if we were to fall below 39.18 again, it would just be a second confirmation of the bearishness of that double top. I don't want you guys to forget that double tops are considered very, very bearish statistically. On the SPY, that critical area of support would be 391.64. I'm going to get into Tesla's earnings, but before I do, a quick station break for the Moomoo investment app. Click the link in the top pinned comment and take advantage of Moomoo's offer of 15 free stock for opening and funding an account. I use Moomoo every day for their free stock screener and their free level 2 data and their 8 smart order types. It helps me to take profit and protect my capital. Take a screenshot of the exact offer so that you can make sure to get the stock you're eligible for. I have a chat group on Moomoo called Stock Josh Family. I love the soldiers of the chat. Click the link, get the free stock, start investing, and come find us. Okay, Tesla's earnings. What exactly does the market want to see today? Tesla is expected to report record earnings after the bell, but it might not be enough. I did a video about a week ago explaining that analysts are looking for quality of profit margin. Growth has been discounted at the moment because of the macro conditions. Now we know that Tesla has great profit margin as an automaker, which is why we love them, but the market's expectation may actually be working against them right now. Tesla stock has a PE of 44.46 because of growth and high margin expectations. We know that in recent days, they have begun to cut the cost of their vehicles, and the market did not like that. On January 2nd, the company revealed that fourth quarter sales were disappointing despite the price cuts that they had announced in December. On that day, Tesla hit a low of $104. I came across this article today. Earnings preview for Tesla's bulls and bears. Profit margins are the next battleground. Tesla has averaged a 28% profit margin. compared to Ford's 9% or Toyota's 15%. So what are the analysts projecting for Tesla's fourth quarter? They have a revised downward expectation of 25%. That is the number to be keeping an eye out for. If it goes above that, then it could be a buy. If it falls below that, then it could be a sell. It's not financial advice. I'm not telling you what to buy, sell, or hold. Moving into 2023, analysts are expecting and accounting for Tesla's margins to fall. They've got the estimate of margin to be at 22% for quarter one of 2023. We also need to watch out for forward guidance. It's what will drive the stock up or down. In addition, we've already seen that big tech can miss earnings, but announce layoffs, which is cost cutting and margin protection, and the stock pops and the shareholders are rewarded. I don't think, though, that will work for Tesla because in my mind, too much growth expectation is priced into their PE. So they need to hold the line on growth, but they need to cut their costs and protect their profit margins. It would do Tesla stock good, though, if Musk would confirm that he does not intend to sell any more stocks in 2023. That could move the market. That could move the stock. I'm sure that he's going to be asked that. The price per share target for Tesla today is $1.15, which is up from $1.05, which they reported in the third quarter of 2022. Fresh technicals on Tesla. Trade quality favors puts because remember, we're at the top of the range. We're not at the bottom. We're not down at 102. But if the market likes earnings today, or they like what the forward guidance is, or they like something that Elon says, then we could easily move up to the resistance level of $153.73. Final thoughts on the market. My bullish sentiment dropped considerably when we fell back below the wall. We are back to indecision and no clear direction. We're getting very close to the top of the trade range on a lot of our favorite stocks. I've got one eye on the SQQQ every day to ramp up my position, maybe add some calls. If we broaden our view of the charts and we move to the weekly candlestick view, which means that every candle is a full week in the market, if we're looking at the S&P 500, the last 2 weeks' candles could be interpreted as a hanging man and as a tall doji. If these markets are going to go up, they need to give us volume and we need to close the week out above 4,000 on the SPX and 400 on the SPY. I'm going to give you guys a gem at the end of the video for those who stayed. I am doing well on my Target put. Just wanted to point out that Target is overpriced on their PE, and we already know that retail sales fell in December at the fastest pace in 2022. It gave them a bad end to a poor holiday season. So I'm expecting a payday going forward on Target puts, increasing as we go along. I found profitable puts when I've gotten in around $164, and I've made profit when I've sold them when it fell back to $162. Remember, Walmart is best in class for a recession. Target, though, is going to suffer. Last call to hit the like, get on board this fast-moving train. Don't forget all notifications on the YouTube bell. Tesla's earnings, they're going to be exciting. Peace and blessings to you all. I'll see you in the chat.